Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of October 6, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week was a little bit of a roller coaster ride for Maryland mortgage rates. They were able to end the week about where they started, but if you take a look at the bond chart on the screen, you can see the short-term trend was all over the place. We started the week with a sell-off. Short-term trend was for bonds to sell off, rates to move higher. Had a big recovery, and the bonds jumped higher, moved short-term interest rates back lower, but then to end the week, good jobs report was bad for the mortgage rates. They had a sell-off. The short-term trend is now looking bearish. Stock market had a rally. So with all of that, and then the big thing is we're at a ceiling of resistance, and every time we've hit that in the past, as you can see, the bond has sold off. So if we look at the past as an indication of the future, this level of resistance, stock market rallying, we're going to recommend go ahead and lock in your Maryland mortgage rate to start the week. Take advantage of these record low rates because it looks like in the short term we have a bearish trend for the bonds to sell off and rates to move higher. So go ahead and lock in. Now if we dig into the reports last week, big report was Friday. September 2014 jobs report released by the Labor Department showed 248,000 jobs created. That's a big jump from 180,000 in August. They revised August and July higher by 69,000 combined jobs. And then the unemployment rate, big shocker, dropped to 5.9%. That's below the expectation of 6.1%, and that's the lowest rate in over 6 years. So overall, looked like a great jobs report. But if we dig into the report, not as good as it appears on the surface. The first big glaring problem is hourly earnings came in unchanged. That means there's absolutely zero wage growth. Without wage growth, you can't have the economy grow any faster than it is right now. So if we're trying to get the economy kick-started, we got to see some wage growth. So without that, we're kind of in the stall. So we got to look out for that. And then the other big number that was not really popularized in the media was the labor force participation rate actually dropped lower to the lowest it's been since 1978. It dropped to 62.7%. Now the LFPR measures the number of people 16 years or older eligible to work that are actually working. So if that number dropped, then that means the unemployment dropped to 5.9%. It was not because of a whole bunch of people going back to work, but it's because a bunch of people dropped out of the workforce, no longer counted in the unemployment rate, but still counted in the LFPR. So that's kind of taking some steam out of that good unemployment rate. It's not because we put people back to work. So we'll have to keep a watch out for that. Weekly initial jobless claims were released on Thursday. That was another good report. Jobless claims dropped to 287,000 claims per week. That's down from 295 from the previous week. So that was a drop of 8,000. That's a very good report, and that shows that the two good reports on the labor market, stock market's rallying. Again, another support for us to recommend locking in your Maryland mortgage rate. Now in housing news, we had a good report from CoreLogic on foreclosure. Foreclosure filings dropped 22% year over year from August 2013 to August 2014. So that foreclosures continued to drop. The nationwide inventory fell by 33% from a year ago. The number of homes in some stage of foreclosure dropped from 936,000 in August 2013 to 629,000 August 2014. And CoreLogic stated at the current rate of the decline in foreclosures, the shadow inventory of bank-owned homes should fall below 500,000 units by the end of 2014. That would provide a solid boost to the housing market because we wouldn't have this glut of bank-owned properties flooding the market. So we'll have to keep a lookout for that. And then we saw a report, the Case Shiller 20 City Home Price Index report for July 2014 showed year-over-year appreciation of 6.7%. So that's a good solid number. That's sustainable. That's around the historical average of 5 to 6%. Now it was a drop from June. June year over year was 8.1%. So we did drop. The housing price appreciation is slowing, but it's becoming in a range that's more sustainable long term. So it's actually good news. In the local news, the next free Maryland first-time homebuyer seminar is this Wednesday, October 8th from 6:30 to 8:30, and that's in Laurel, Maryland, the North Laurel Community Center. And then we have one Saturday, October 11th from 10 a.m. to noon this Saturday, and that is in Frederick, Maryland at the Hampton Inn. And then the next one in Towson, Maryland is Saturday, October 18th from 10 a.m. to noon. That's at the Sheraton Baltimore North Hotel right there on Delaney Road. Now you can register for either one of those events by giving us a call in the office, 410-412-3319, or online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.